Hey guys, welcome to the podcast. Appreciate it. I'm going to keep this really short today, frankly, because I have some other things on the agenda. As you can see, the Dow Jones down 185 points, tried to stabilize during the president's speech, and he really didn't give any direction that led to investors believing that something positive was going to come out of any of these talks. Of course, meeting with CEOs today, meet with Congress at some point in the future, but you can see Dow down 185 points, pretty much its worst levels of the day. I think it was down 200 at one point. Transports really got whacked after outpacing the averages the last few days, down 2.5%. Utilities are now outperforming. They're still going down, but they're outperforming, and they're severely oversold, only down 1%. NASDAQ down 1.3, Russell down 2, mid-caps down, financials down. And you see there the Treasury 10-year Treasury yield flat on the day, 1.59%. And very interesting that didn't really move. You would think money would be flowing into Treasuries, but we saw a little interesting dynamic today where you saw the dollar was actually falling. The market was falling. They tend to move opposite. That was falling. Volatility for the longest time was actually down on the day. And then really when we went from down 70, let's call it, to down 200, that's when volatility finally started to pick up. And you can see it's still under 18 at 1792, up about 8% on the day. So in Treasury rates, as I mentioned, flat on the day. Okay, so let's start with the S&P. And I think there's a couple of things I want to go over today. First of all, are we oversold? That's always the question. And we were getting very, very close. The market was trying to bounce off of that 200-day moving average right in here. Spent a few days there, and then, of course, broke on through today pretty convincingly. You can see these Bollinger Bands are kind of widening out, just saying that this volatility is picking up. But here's the thing. What we're wanting to see from a trading standpoint, this isn't a bullish or bearish thing, but if you're somebody that's wanting to make the next trade, and let's say you're sitting out the market and you're looking to buy, the next trade is obviously going to be to cover shorts or to buy the market and to use some of your cash up. And if you have some cash, this is what you're going to be waiting for. Even if you're somebody that believes the market ultimately goes lower, again, the market only goes down for so long in a straight line. So here's what we're looking for. We're finally in the oversold category. And the reason I'm saying that is for a few of my indicators are there now. One of the things we look at is we look at all the stocks that are above their 10-day moving average. So, if you look at all the stocks out there, and it's a real short-term moving average, 10 days is not very long, but of all the stocks out there, you have basically less than 10% of them are above their 10-day moving average. So you have a very, very low number. That means almost every stock is going down. When you get it that lopsided, you tend to get a rally, and you tend to be oversold. Now, is it oversold meaning, hey, this is it, we're going to have another run like we did back in July, starting here, and we're running all the way back up? I don't think we're there yet. I do think we're in the process now of getting to that bottom. And the reason I say that is because, first of all, if you look at the screen here, we've got, this is a RSI, Relative Strength Index. I'm sure some of you look at this, but it's kind of one of these oscillators that kind of goes from high to low. And what we're looking for is these, what I call these negative and positive divergences. Now, we first made a low down here, and you can see it went below this line here for the very first time, and that was in mid-May. And so we did get a rally. We got a rally all the way up to this level in here. It was about 4 or 5 days and made people believe that, hey, the worst is over. And then we went down further and made a new low down here. But look what happened. You started to make a higher low in here and a lower low on the price. So the S&P 500 itself was going down, making a new fresh low, while this oscillator was actually making a higher low. That's what we look for. You could point to here, and it wasn't necessarily perfect, but here, you're getting this. Now, at this time, it was very hard to be negative on the market because you just heard about QE3, right? The market had just broken out. That was this little bump right in here. And so it was hard to go against that. The market had been working for some time. The election was coming up. Romney's numbers were looking a little better. It felt like the market was anticipating maybe a victory from him. So it's very hard to bet against the market. But ultimately, that turned out to be the right move because you can see it started making lower lows, even though the market was moving sideways, and ultimately it broke down. But here's the thing. Now we fast forward to today. We're just now going below it. So this is the first phase. The first phase is, okay, we're in the oversold category, but is the market just going to make a bottom and just head straight up? No. The answer is I don't think it's going to do it. I think what's likely to happen now is that you do get an oversold bounce, and maybe it comes up to somewhere right in here, and then it goes back down, and maybe it even makes a new low. But if we see this oscillator making a higher low, in other words, the selling intensity isn't as bad going down, that's your ultimate green light, would be right in this spot, right here. Because if this kind of goes up and then it kind of comes back down and it makes a higher low, now you're in business. That starts to look just like back here, and we start to see the market break out. So we're at that point now where we're very, very oversold, and that's good. That, you know, you almost needed, and I mentioned this in podcast previously, you needed some fear to pick up. And this is the first day that I have sensed, by talking to some of you, by seeing people on Twitter, and by seeing articles written, this is the first day I've sensed panic. I've sensed over time some disappointment maybe in the election and maybe pessimism over the fiscal cliff. We haven't seen the panic. I wouldn't even say, you know, the day after the election was necessarily panic. I think a lot of that selling was due to adjusting portfolios, selling out of certain things, maybe moving into other areas. But that was a 90% down day. And so we had a 90% down day on last Wednesday, right? The Dow was down about 300. You had 90% of the volume was down, 90% of the stocks were down, the points lost were down. All of those things were very, very skewed to one side. We came very close today, and for all intents and purposes had that same deal. So now, within a week of each other, we've had two 90% down days. And if you go back to some previous podcasts, you remember I was talking about when you have a few of those combined together, the next thing you look for is a 90% up day at some point soon. If you get that, that shows that all of the selling was exhausted back here, and new fresh buying comes in, and it's very intense. What may even be more helpful, as painful as it might be, is to get a sell-off early morning tomorrow, and that capitulation takes place, and you get an intraday reversal. Those are the best type of reversals, are the intraday reversals. And in fact, if you go back to June here, you know, and this isn't a real huge example of it, but you do see this intraday reversal back in here. I think if we go back even further, and we go back to October of last year, and I'll kind of zoom in on that area. This was a big move back in October of 2011. Remember, we were going through a major sell-off. Market started going up and down, and we had these big 400-point swings in the Dow back to back. Remember, we had 4 of those in a row back over here in August, 8th through 11th or 12th. Really nasty. And then we broke down, and many, including myself, thought, hey, we're going to get, this thing's going to break down to really fresh lows. And it was a fake. It broke down, and we had this intraday reversal right here where we broke down in the morning, reversed, and then it went up to have a really nice rally for the rest of the month. Now, ultimately, it went down further, and then, you know, off to the races. So, you know, here we are today. Are we going to get that same thing? I think we're certainly setting up for a rally. We don't know where the rally ultimately ends. We don't know if it's going to be a all-in type of deal where it sells out and you say, hey, now it's a green light. But I do think, at the very least, we're getting to a tradable rally. And if you have cash, this is where you want to use that cash. It's not today. Again, it's setting up. It's in the first inning of this oversold. So we're in oversold category. And if you're somebody that likes to pick the bottom, take a stab. You know, we mentioned the other day taking a stab at the 200-day moving average with a piece of your trade. Okay, we know that hasn't worked out so far. But if you're layering in, you know, and you keep buying these, at some point what's going to happen is your average is going to be maybe somewhere in here, and all it takes is a little bit of a rally, and you now have a profitable trade. So we do have the panic going on right now, but I think we're finally getting to the oversold zone, but now we're in it, and there's a lot of oscillators I look at, and they're not all, you know, green light, hey, we're definitely there, but they're now getting definitely to that point, and we're seeing the fear pick up, and this is the first day I've sensed it, and that's ultimately what we need for a bottom to be in place. Now, I want to point out a lot of stuff happened today that was just, we'll call it a vomiting stock market where things were getting tossed out that made absolutely no sense. This is a company here, Main Street Capital, business development company based in Houston. Smart guys doing deals all the time. This stock was at a new high yesterday, okay? It was down 10% today, and I own this for more of an aggressive style of portfolio because it's obviously a smaller company, but these are the new banks. Business development companies are the new banks, and 6% yield. Company comes out earlier in the week with fantastic results, and the stock gets sold today. What this is capitulation selling. And again, I'm not saying today is the day to go buy this particular stock. I'm not even telling you this is the stock you should buy. This is a company that business is great, and what happened is the stock market today is selling companies like this, and look at the volume, huge spike. That shows real intense selling, and again, intense selling leads to bottoms. And this, I could go through tons of charts like this, but there's plenty of stocks that I saw down 10, 12, 14% in just one day. And it was closed-end bond funds, it was REITs, it was master limited partnerships. We talked about master limited partnerships the other day, how they're getting beaten up. These stocks are still falling. And, I think there's a misconception. There's a lot of people who don't understand how they're taxed. And I mentioned this the other night, and they're selling them because it's an income-producing investment. I mean, here's one, 7% Spectra Energy. I don't own this one, SEP. But just to point out the chart and what's happening, look at the volume today, 4.5 million shares. This thing usually averages 126,000 shares. And you go down the list here, Cheniere Energy, same deal. Energy Transfer, again, not as bad, but today down 4%. Even Kinder Morgan. I mean, this is setting up to be a beautiful buy because there's a misconception on how these are taxed by the retail investor, and most of these, about 75%, are owned by retail investors. And, you're getting this peak in selling. So, and again, today is not necessarily the day, but I think if you have extra cash and you're looking for a long-term investment, this is still going to be the place to be. And you're getting that panic selling. I mean, this is panic selling. When you see a stock do that and the volume do this at the same time, that's capitulation. So we're getting close, and you can start cherry picking some of those. But overall, the stock market is obviously in a tough place, and it's trying to discount the unknown. Nobody knows how to plan. Nobody knows what's coming up next month, next year. And so it's sell first, ask questions later. But the thing is, look for opportunities. We still have to be opportunistic. Yes, you may end up having to sell some things you don't necessarily want because you get stopped out or whatever the case, but look at what the income is. Are they still able to pay that income? Look at the cash flow of the company. Look at the business model, all those different things. But don't be a hero here either and try to pick the bottom. I'm telling you, we're in a zone now. We're getting in the zone of where we start to say, hey, things are getting interesting. We can actually try to take advantage of this with the cash we have. And even if it's just for a trade, there's going to be a time to do that. So sorry to keep the podcast so short today, but wanted to get that out to you and just let me know let you know what I'm thinking. Have a wonderful day, and we'll talk to you soon.